Right, lads and ladettes. If you've been trying to trade NAS in this any indices really, or any of the charts for the last few weeks, I suppose. What have we got here? 8 weeks. This is a little video I want to do very quickly, diving into the whys and what fors, based upon the old well-known saying of sell in May and go away, and what's actually happening in the charts. So if you've got any confusion about what's going on at the moment, then this one is for you guys, okay? We're going to talk about what's happening, what it means going into Q2, 3 and 4, and honestly why it might be the absolute best thing for your trading at the moment. We're looking at the M&Q, as you can see there, the micro M&Q, which is pretty much identical to M&Q, E-mini, NASDAQ 100 futures market. All right. So first things to note really is the general structure of the overall market, and what we're looking at is the entire market as available on TradingView going all the way back to where we got here, May 2019. Yeah, is it May? Yeah, May 2019. Now, NASDAQ is generally a bullish instrument anyway, as most of the indices, they're designed that way. They're designed to increase over time. Obviously, nothing, price-wise continues to go up in a straight line. I mean, initially, if we're going to go back to April 20 here, we had a great sort of trending line there on the weekly, right, which eventually did break down. So you've got multiple opportunities there on that bullish move to get in. And then look what you've got at the top there. 3 weeks of consolidation before breaking the actual uptrend. Don't sort of set your heart in stone as far as trend lines are concerned. They're good for seeing when you're in, a trend or a range or whatever, but there's an awful lot more to price action than that. But these make it obvious, right? So you've got your upgoing trend line there, break below. What happens there? We got a large number of weeks, pull back there, large number of weeks, pull back there, large number of weeks, and what do we get at the bottom here? We get a little range again, right? Which is sort of standard. You've got one there, you've got one there, okay. Then we've got a move up, which gives us a second touch of this trend line. Obviously, that might not be crystal clear when you're in it, but becomes obvious in hindsight, like everything does. And then we're going to move back up again, pull back, move back up, higher highs, higher lows, again, higher highs, higher lows. So your trend is going sort of there, minor pullback, big expansion, minor pullback, lower high. Look what happens after the lower high. Down, lower low. So you might be thinking you're in a downtrend there again. But no, it corrects that and creates another higher high. So we're back. We've corrected the move. We're back and up. Higher low there to the last one, which is there. Higher high, lower low, higher high. I suppose you could call that a range there, really, especially as we're going to move down after it. So again, you've got another range happening there. So look at what gets repeated time after time, right? Expansion, consolidation, changing the state of delivery, price action moving down, consolidation, then expansion again, consolidation. This was a big pullback. Was this the COVID one? I can't remember now. What's that? March 25. No, it was after COVID. COVID might have been this one year actually. But anyway, we got a big pullback. I think this might have been the tariff tantrum, as it's lovingly referred to. And then again, we've got a change now in the direction. This is an increase in speed in the moving up, right? So just going to delete some of this just for clarity. Okay, so we're back on the main picture. I'm going to explain that, hopefully. Okay. So there's your overall uptrend with the variations in it, corrections, pullbacks, etc. Then on a weekly, we've got a much higher solo there. Before this was actually put in, which was the last sort of dive, then we were like this, right? We were sort of on that sort of vibe. So again, that's sort of hinting at going into a parabolic, excuse my French, blow off top, but no, it pulled back. So on a weekly, that would mean you'd reset the trend line there, and then the parabolic blow off top is actually is sort of self-apparent, because forget these weeks here for a minute, that is pretty much vertical, and that is the textbook definition of a parabolic blow off top. So we're going to leave that one where it is there for a second. Reasons will become obvious, right? Now, this here is, we're into July now, but I mean, if we go back to May 26, then this is where, and it fits with the parabolic blow off top in this case as well, right? This is where the expression sell in May and go away actually comes from. Let me just turn off that. But it's hidden a minute. Let me just get rid of that just to save any clutter on the chart. I'm going to keep this as simple as possible, right? So there you get your parabolic blow off top. I can't seem to say that today. Which was there initially, and then there, and then sort of like there, and then we've broken down, right? So that is your line in the sand, as it were, that low, but then on the daily or even the weekly. But if you're looking at the weekly, this becomes even more obvious. But let's stick the daily there for a second. I'm just going to get rid of this. So on the weekly, if we make this a bit more obvious for you guys, okay, this is what we've got. May hits there, comes to dead stop. No, it doesn't have to be May. This isn't like a solid rule. It could be May, it could be June, it could be July, could be January, February, March, or April, for all we know sometimes. But in this case, a parabolic blow off top, which started here and then looked like it was over and then continued, is basically massive expansion. That's all it is. But look what we've got at the top here. Now this is on a weekly. Let's illustrate this a bit more clearly on the daily. Because what we've got on the daily is this huge blow off top. Peaked there at the new all-time high. So, you know, that's as high as we went. Came back and then pushed back up again, made a lower high there, and actually pipped it, a lower high there, sorry, and then actually pipped it a little bit, which is a bit unusual, because in any respect, it's what you're looking at here now, right, is a shape which is like this, right, which again, a lot of people might confuse this with a sort of pennant pattern or a flag pattern, whatever you want to call it. And that wouldn't be, you know, so invalid. It's just a case of, in this case, after all this bullish momentum and parabolic blow off top, it isn't really what it's about, right? This is the consolidation phase. Now, the reason it makes it tricky to trade should be very obvious, because all we're literally doing from, let's say here, sorry, my bad, wrong instrument there. All we're really doing, right, if we look at that as the range, is going up, back down, If we go into this range, it's even more pronounced, right, which would be there. But basically, this is all a consolidation phase, which is 100% normal. There's nothing, shy about this. Now, again, we do have a cycle low, which is due in Q4 this year. So, from my perspective and cycle trading, it would be nice to see this either grading sideways or slightly lower, until we get to the right time frame, because that's what cycles are about. They're not about price, they're about time frame. We need to spend some time in here to gather orders for the market to decide what's going on. We're looking at sort of October, November, December sort of time. We will have monthly and cycle lows in here, which we can trade, which will be high probability, but we need to spend quite a bit more time in here to get to the end of the consolidation phase. And from that point, right, we will then get some more information whether the market wants to pull back more severely before going higher, because it is a bullish instrument, unless we have nuclear war or whatever, or whether we're just going to continue on the upward trend. Now, that could come to there and then continue and continue, but we just don't have enough data yet. Now, again, like I say, if you've been trading and struggled, don't beat yourself up about it, because this literally is where the selling may go away comes in. The slow market same for a reason. Summer months historically bring lower volumes. I don't know whether people go on holiday more or whatever it is. There's less institutional participation from the big players, the heavy players, and obviously retail will just argue about which way they want to go. Institutions control the actual market flow and participation. And when you get those staying out the market a little bit more, then that does lead to choppier price action as well. So combine that with a market that's just come off a parabolic run, and you've got exactly what we're seeing on NAS, the other indices and other charts right at this point in time. Liquidity sitting on both sides of the range, no clear directional bias, and just back and forth. Now, this is where really understanding cycle theory matters more than any single setup. My whole order flow cycle method is built around this idea. Yes, a lot of it is sort of like commonplace as far as order flow was concerned in there, but you'll find very few people in practice that actually go in depth with cycles and cycle systems, So when you combine the two, then you've got a lethal weapon. Markets always move through phases. You get expansion, then you get the consolidation, then eventually the market picks a direction again, and you get the next leg of expansion. Right now, NAS is sat in this higher time frame consolidation after that big expansion. Like, no question about it, right? Often new traders can get chopped up in here and get quite disheartened, not be able to work out why the setups aren't quite working the way that they used to or they should do, why their entry model isn't as perfect as it has been. And that's because this was easy. There was another server that some of us were on, that were calling for doom and gloom, back here, back here, back here, and back here, back here, and we had a little WhatsApp group going for the boys, and just jump on there. NAS is my speciality, and saying, Jeff, just call trade, come sell. I was like, no, don't sell, buy. To this part, in all honesty, I called all of this, right, live with the guys, and I've called pretty much all of this as well. So this is time to just ease off a little bit, that's all. This is also known as seek and destroy, where the price will seek your stop loss and destroy it, basically. Whichever way you think it's going to go, it won't quite go that way. I'm even finding this in my own trading. So the classic seek and destroy behavior. Price runs one side of the range, takes out a few stops, comes straight back, runs the other side. Same thing happens. It's not you, it's not your model, it's literally what consolidation is and what it does. It hunts liquidity on both ends until it's ready to actually commit to a direction. So if you've taken a few setups, as I say, and it's not gone perfectly, it's not you, it's not your system that's failing, it's exactly what should be happening right now. Okay, so that brings us on to the next question in my eyes. What do you actually do about this? You know, you want to get trading, you want to learn, you want to, get experience in the market. So there's a couple of things I would say in that. Cut your trade frequency, and I mean dramatically. Most beginners will overtrade anyway, massively, right? One big sort of issue. Another issue is they won't let winners run. They'll get out of it too early because they're scared of losing money on a small account, for example. And another big one, stretching back in the memory, is holding on to losers, too long, hoping above hope they go the other way, and that's how you blow accounts. So take your profits, let your profits run, get out of your losers early, massively cut down on your trading frequency, even if it comes to switching to paper trading and anything like that. If anybody wants any advice individually, please message me. It's what you're here for, and I do enjoy helping people. I remember when this was not easy for me as well, so I've been where each and every one of you are now, many times, not just the once. So yeah, cut down, work on your stupid mistakes, your psychology. Only take setups that to you are stupidly obvious, right? And control your risk. And honestly, it's okay, even if you just want to sit this bit out entirely, right? If you have to convince yourself it's a good trade, probably isn't. And that's the truth, right? So don't force things. Don't make yourself trade. Don't be clicking that button 3, 4, 5 times a day, chasing losses because you placed a stupid trade. Cut all that nonsense out. And the sooner you do, the better for you, okay? This is what you've got to be aware of. Seek and destroy. Not a good time. Good times will come again. Patience is the key. Now, this is the bit I really want you to take away from this, right? Over and above everything already discussed, is the fact that this is not wasted time. This is the perfect time to sharpen your skills and get ready for Q4, because Q4 is going to be amazing this year. We've got 8-year and 4-year cycle lows all lining up lovely together. Stars are aligning. So once we got some clear direction heading into Q4, plus there will be leaders that we can trade in the gap before Q4 really kicks off. I think metals are likely to be one of the early ones. MicroStrategy I've got is making me very excited what I'm seeing with MicroStrategy at the moment. And these have all got massive swing trade option sort of possibilities with Bitly is the same, but I think Bitly is going to be a bit later. But bear in mind what I think could change on a month-by-month basis as well. Nothing is carved in stone with the markets. Nothing is guaranteed, and anything can and will happen, whether we want it to or not. Let me just switch that off a minute there, so on that one. So again, I've dropped all that down to the 1 hour now. This just illustrates the same point. Seek and destroy, seek and destroy, seek and destroy, right? 15 minutes. We're going to 50 minutes. Now, that's not to say that you can't find trades in here, because you absolutely can, right? Especially with the entry model I've been working on with a couple of lads at the moment. But again, control your risk, control your temperament. Take a win when it's there, run with a win when it's not. These, between the range, is called fading the range. Look what you got there. This is a prime example. It's just caught my eye now, right? Expansion to the top of the range, comes back to the CE, consequent encroachment, which is 50% of the range, and reacts again. Look, it goes back to instant double top, exactly 50%. Mad, isn't it? So then we get a poke below, but don't quite get the bottom of the range. Then we get consolidation with you. Remember, guys, as well, time frame is fractal, right? So what happens on the daily will happen on the 1 hour, happen on the weekly, happen on the yearly, happen on the 1 second even, right? Every candle is built the same. So consolidation is consolidation, expansion is expansion, and accumulation is accumulation and consolidation are towards the same thing. Expansion is when you move up. This, you get supply and demand traders classifying that as support and resistance. That would be support and resistance. I get it mixed up, right? That'd be support, that'd be resistance. Simple as, right? Could tighten that up there to that low there, or say that one's peaked above it, which would make these a lot closer. So again, all of these things, right? Push down there, didn't quite get down, push back up again, didn't push up, so went back down again. We got an odd move up, which was in a trade breakdown I did last week. There's the correction for it. That was probably news related. Can't remember now. So that sort of cancels that's out. That out basically. That's just an anomaly, right? Then you got consolidation, gradually grinding this way down, but there doesn't quite get back down and then pushes up. Consolidates the CE and then pushes back up. It doesn't run to the top of the range, but then pushes back down. Reacts around CE again, pushes lower, same as these. There's your support or resistance, whichever you want to call it there again. So again, all of this is fractal. There are trades to be done. Lower your expectations until we're further down the road is my key advice, right? Manage your risk. Use this opportunity because it's a massive opportunity right now to lock in, gain knowledge that you need, so when when things do improve, you're in a great position to actually earn some really good money. Guard your system, guard your confidence, guard your capital, guard your mindset, right? Be aware of what you're working with right now, because when this range does resolve, and it will, right, you want to be sat there with a clear head, full account, ready to go. I'll continue to run the classes and analyze on the lives to help anyone that needs it and get you guys up to speed. What I would say is it's obviously up to you and how much you participate and you put into it. Nothing in life that is worthwhile comes easy. So you need to work. You need to lock in with me. You need to send me messages. You need to ask questions. You need to watch the private videos that I share and all the other bits. All this is what you need to be doing right now, right? If you want the daily breakdown of which phases we're in day to day, that's exactly what we'll cover inside on the trading floor. And that's pretty much it for this little video, guys. Patience. Appreciate you. Lock in. Get your learning done now. Reduce your risk and preserve your brain power. Don't get stressed out over it. Last the course until you get to Q4, and then we can make some proper coin, proper bag, right? Any sort of good swing setups that come up in the meantime, I'll be sharing those in the members only section as well, so you'll have other stuff, and anything you need, drop me a message, get locked in. All right, guys, thanks for watching, appreciate you. Cheers, people.